Hey, it's Clay, and this will be a video chart on ticker symbol AVXL. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like through this time frame, then it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. Now, I will be the first to admit this chart is pretty sketchy, it's pretty shady, and it's relatively confusing, and I don't have a problem saying that. I mean, when you stop and think about it, yeah, the price made an awesome move, and then there was a pretty deep pullback, but it wasn't quite a crash, but it was a deep pullback, and then all of a sudden, during the final 30 minutes of the day, the price exploded back upwards. So definitely, if you're kind of confused by the price action, hey, welcome to the club. Now, for me, I'm going to try to just make this as black and white as possible. And in my mind, it all starts to revolve around a single area. And actually that area right where it bounced from, maybe not quite. Yeah, not quite. Bounce a little bit higher above there, but $2.50. Why is $2.50 so important? Well, let's look at a couple different scenarios here, and hopefully this can kind of act as a vocabulary definer in terms of defining whether the chart is bullish or bearish. So one scenario that could potentially happen, I'm not saying this is what's going to, but one scenario is the price comes back down to $2.50, breaks below it, and then just continues on down. At that point in time, what would you have? You would literally have the price right back inside of the range where it all started before the big move occurred. And that would basically put it at pump and dump status. I mean, I don't think there's any way around it because, yeah, the price has already made an awesome move. And then if within a relatively short amount of time, the price is right back to where it started, that is the epitome of a pump and dump. Again, though, not saying that's what's going to occur. On the flip side of things, maybe the price heads back down to $2.50, but then behaves in this manner and then starts to work its way back upwards. What would you have in this situation? Well, you'd have a set of lows right there. You'd have those lows right there. If you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And that's what truly bullish moves are going to do, right? Over time, they're going to make progress upwards. So 250 really is kind of, like I said, acting as that vocabulary definer. Is the price going back? Again, going back associated with bearishness, or is the price making progress? Making progress associated with bullishness. So we'll see what happens with it going forward. But yeah, in my mind at least, $2.50 is very important because it's very revealing in the sense of what the price is actually doing in regards to making progress or going back. So we'll see what happens with it next week. But yeah, what a crazy day. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.